What's good, guys? It's your boy CS. In this one, I'm just going to take a quick look at the market, see where we're at with Bitcoin and where we may be heading. So I'll look at my favorite chart, which is the spider line chart. As you already know, this is a historic support and resistance level. These white lines, as you see, they play as historic support and resistance, as you can see from here, from an intersection. And so I've also combined that with the Fibonacci. But on the daily, we can see that it hit and it got rejected. Today, so far, has hit and got rejected. And also one of the things on the Fibonacci was we finally broken that 0.786 level, which is here at 61.12 region. Now, we've not come back and retested it or back tested it as such, and we may need to do that in order to go for the next leg. That's not a given, but just something to be aware of. As you can see here, this was a descending wedge pattern, right? And we have now broken out of that. And the target price has actually come to fruition. But really, one of the chart patterns that I wanted to look at was this one here, which I know there's a lot of horizontal resistance. You know what? I'll go into my Bitcoin scrap pad and show you. It'll be easier here. So yeah, we've got this one here. Originally, I thought it might be a rising wedge, but actually looking through the noise, this looks more like an ascending wedge pattern where it's now fully broke through. And usually when we break the neckline here, which is this horizontal line, you normally will see Bitcoin come back and back test it and then go. A lot of people ask, what do you mean by confirmations? What do you mean by back test? It's basically a retrace to show that the bulls are now in control of the market. The bears are being liquidated and the bears are still trying to push down to that level, but they can't because there's huge demand now at this zone. And that's why people who FOMO in and they're buying up here. Look, we'll have a look at the lower time frames in just a second, but really you shouldn't FOMO in. You need patience. Patience is everything, as I always say. And so if I look on the weekly EMA, I'm just going to move those chart patterns just to make it a bit more smoother, right? We're now above that 20 EMA, and I've been telling everybody that this historically in a bull cycle is so significant to stay above because it keeps us on the trend, and most likely we are going to get a close above this 20 EMA. Even on the daily, I was heavily surprised we broke through this turquoise line, which is 100 EMA and kind of the final boss resistance. And so it actually correlates with, that kind of horizontal line where we've not actually come back, tested the 50 EMA or the 100 EMA. And also for a trend change, these three will act as a cluster. So maybe when this comes down in a few days or so, these three will all intersect with one another and will act as a massive support zone. So imagine this line goes there, this line goes there, and this line goes there. That's huge support zones, demand zones for Bitcoin, right? And that's where the bulls take control. And if you've not got an entry, that's where you would be wanting to look for an entry. Not financial advice, obviously, but if I was adding more, for instance, that's where I'd be looking at. And so the other points we need to look at, now I'm going to go back on my horizontal resistance chart. We've nicely actually played this well, where we're sticking above this horizontal zone, which is a good daily and 4 hourly mid time frame support zone, this yellow line here. However, the 20 EMA to confirm another trend change, which kind of corroborates with everything that I've just said around this 61, 62 region, we may get a retrace down here and then continue on. Now, one thing I also wanted to mention was, going back onto the scrap pad, if I just remove the EMA ribbons, that ascending triangle, I'll just do trend line this way, it's fine. That ascending triangle that I just drew a minute ago, and I'm going to do for you again now. Don't think it's that far. I think it's more like here. Yeah, that hits most of the hollow bodies. Right. When we measure this, right, from here to here, it's about an 11% move. So if we go to 11%, that would send us to, around 68k. So kind of what I mentioned earlier on, around this region, 68k, is where the price target will be. Now, remember, this is broken out. It would be great if we can get one more beautiful dip round here. And remember, nothing needs to happen in a day. Like, these things take time. They do take time. And so, like, we could just hover around, and we could chop around a bit. We could even get a little bit of a wick down and scare some people out, and then finally make that move to 68k. But one way or another, this trend looks like it has now finally reversed and looks very, very powerful. And remember the flashing sign that I gave you on the wave patterns? Well, like I said, it didn't happen imminently, but it was bound to happen because this is a really rare signal for this to flash. And even on the 3-dayer, you can see there's a divergence here. See how it's curling up? And it'll just curl up like that into October, maybe. I don't know for sure, but that's usually how these things pan out. And on the weekly, as you can see now, this is now curling up. This is now played out, the divergence on the bear short. And this now may curl up like this for the next few weeks. And we may go parabolic by that time, right? So, again, just things to be aware of when we're looking at Bitcoin. And more importantly, the chart that everyone looks at is this descending wedge, flag pattern that I always keep saying to you guys about, right? And I've drawn it here, which is, we might just chop around and then finally get something like that. So I'll do it again. It's something like this, which is we just chop around, maybe come down a bit, maybe come down a bit lower, and then come back up, and then we make a charge for it. Now, there's two choices. We might get rejected. And by the way, I'm just playing around here. We might get rejected, or we might go over and then get rejected, or we might go over and then we might get a retest. Whichever scenario plays out, the third one is the most important one where we're waiting for a retest on this line. That will give us full confirmation that is the final dip. And I can promise you that will be the final dip. And again, if I go back, and if you haven't watched my last, very perma bull video that I did last time, a couple of days ago, where I basically gave you the facts of mining, the MVRVR, Z-score, the global liquidity, the money printing that's occurring right now. I gave you so much information. It was a half-an-hour video, as well as setups on the last video. That another key point that I actually didn't even include was the fact that historically, and I have said this though previously, Bitcoin normally moves after the US elections, which is around November time. I mean, my fellow American friends can assist on this, but as far as I'm aware, it's November time. Last cycle, Bitcoin broke and went parabolic around the US elections. The previous cycle before that, it didn't occur till March that it broke its all-time highs. And again, no two cycles are the same. But the way that we're heading, this is where I would be thinking Bitcoin will be going. Now, obviously, if this was a worst case scenario, and I've not done any bearish sentiment, but if this was a worst case scenario, right, we may get something like this, right? Which is, if there is a looming recession, and, you know, all markets are really smashed to bits, we may get something like that, where it just goes all the way down. That is the worst case scenario, by the way. Very, very worst case scenario, where we go back down to the descending channel once again. And you got to remember, everybody, and I mean everybody at this point, was saying, yeah, we're going to go all-time highs. I was one of them that didn't say that, by the way. At this point, literally everybody was like, yes, we're going all-time highs. I didn't say that. Literally everybody here, all-time highs. We're going to blow. We're going for all-time highs. I didn't say that. This one, though, I'm not going to lie. Everybody was still saying all-time highs, blah, blah, blah. I'm not going to lie to you. This time I thought, right, 1, 2, 3, 4, 5 hits. 5 hits. This is the 5th hit. And this is where a lot of people got caught out. And that's where we need to be careful. But also, there's a lot of liquidate on the heat map. There's a lot of bear entries, bear shorts around here. So the liquidations could send us if we liquidate them. And you got to remember, this whole move occurred because the bears got liquidated, right? This whole move got moved because all the bears were shorting around here because of what they saw on the chart, which was, where's my horizontal one? If I go on the weekly, if you see around this region from anywhere between 60 to 62, so there's this little green horizontal zone and this yellow zone here, this has been a key support and resistance zone, right? Depending on who flips who between bears and bulls. And look, the past 2 weeks, we got massive rejections from 62. 61. They probably thought, yeah, 60 will reject them. Okay, they can have 60. We'll get them at 62. Nope. 62.5. Nope. 63. Nope. And then here now, 64 is where some shorts have come out to play, and around 65. So you got to remember, it's player v player. Bears versus bulls. You're on one side, they're on another side. That's the way that you need to think about it. And somebody has to win, somebody has to lose. That's the game of trading. That's the game of markets, right? Now, one final thing I wanted to look at on Bitcoin is RSI is semi-overcooked, but this is actually very good because the retrace when it comes down isn't actually that heavy, as in I don't think we'd be seeing anything like 57 or 58k again. Personally, unless we had a wick down, I really don't think we will. The other time frames, like the 2 hourly, absolutely cooked as well. And as you can see in the wave pattern up here, which I'm going to come on to in a second, overcooked. RSI on the 1 hour, overcooked. And now, potential wave divergence occurring here on the 1 hourly. See that? I'll stretch it out for you. So we could see something like that come down. And that could occur over the next few days. So yeah, maybe by tomorrow. Depends how harsh it is. Obviously, if Bitcoin did still move, because it is still, you know, wrecking bears, we could still come up a bit. And then we could go down. But either way, the 1 hourly, there is a divergence. And at some point, we are going to get some type of retrace. And I think that's also a really good point to remember, which is, as much as we enjoy these massive parabolic moves to the upside, right? Don't forget 101, which is in a bull market. And remember, I'm not a very good sideways trader, but in a bull market, it doesn't matter what happens. The trend is always like this, up and down, up and down, up and down, up and down, up and down. You see how I'm just doing these squiggly wave patterns? They might not be accurate, but eventually they will catch up. They will catch up, and then eventually we'll be, you know, around here, 56, 60. But that's how wave patterns work. Impulse move up, retrace, impulse move up, retrace. One more time, impulse move up, retrace. And usually the retrace is around 50%. on average. Can be more, can be less, but that's just how it normally is. And then impulse move up, retrace, sometimes hits that as support, and then same thing, keeps just going and going. I'm giving you 101 sweet science again, because some people forget the basics of how markets work. If we actually just take it, you know, as a basic methodology, and we look at it from the outside in, it's not actually that difficult. It's that we make it very difficult by over analysis paralysis sometimes is unfortunately our biggest weakness. And so, zooming out and looking at it like that, it just makes things much, much easier. And obviously in the reverse correlation, we can also say that, yeah, we have been in a bit of a retrace here. So it's kind of been like down, up, down, up. So lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, like that, right? And then now we've tried to make a higher high from there. And that's where we're at. Obviously, bears would argue this here, and again, I'm just giving you the bearish sentiment. They would say, well, that's still a lower high technically. And you know what? If you zoom out, they're technically right. Because look, lower low, lower high. Lower low, lower high. Still not gone above there. Lower low, lower high, lower low. And, well, let's see where this goes. This, for bulls, would say, no, this is where it ended. This is now a higher high. This is a higher low. This is a higher high. The next one needs to break here around 61, 62. That's a higher low. And you know what? It just depends on which sentiment you follow. Hence why I always say, make your own risk management plan. Backtest whatever works for you. Some things work better for me. That may not work for you. Anyway, guys, that's enough alpha for today. I shall catch you in the